Welcome to the 3-Minute Trading Coach. I'm Brett Steenbarger, and today we're going to kick off a two-part series. The first part in this video, I'll be talking about how I find trading ideas. And in the second video, I'll talk about how I manage trading positions. Now, I wasn't really planning on talking about these things. Usually, people want me to talk on topics of trading psychology, but I've noticed in going through various websites and encountering the work of various people who call themselves coaches or mentors or whatever, that they talk a lot about trading in the abstract. They give advice about being disciplined and managing your money and all that kind of stuff. But they almost never talk about specific trading ideas and how to trade. It's really incredible. And when they do talk about trading ideas, they usually will refer to shapes on a chart. Now look, if you had a meteorologist who told you that he could predict the weather by looking at shapes of clouds in the sky, you would immediately think the guy's a charlatan, right? On the other hand, if someone tells you that they can predict the world's financial markets based on shapes on a chart, well, then we call them a technical analyst. Go on figure. Okay, so let's talk about trading and developing trading ideas. There are many different ways of developing trading ideas. The idea is not that I have some special formula that everyone should follow. The idea is that you should get true mentoring by talking with people and seeing how different people trade and how they succeed in markets. And eventually, out of all of those examples, out of all those models, you'll be able to synthesize your own style, okay? So for me, the starting point is that every market has a trend, a directional component. Most recently, the stock market has been trending higher, and it's been a very strong trend. Superimposed on that trend is at least one cyclical component, and sometimes more than one. In other words, the market will rise and fall during this trending period. The cycles I found in my research are much better measured in volume terms than in time terms. In other words, the market won't necessarily cycle higher and lower every X number of days, but we do see more regular cycling for certain volume periods, every X number of shares or X number of contracts traded. So once I identify a dominant cycle, I am looking to trade with the trend, and then I am going, and we'll say the trend is up, I'm looking to trade with the trend, and then I'm looking for that cyclical component because I want to buy short-term oversold points within that trend. And I want to see that those short-term oversold points are at a higher price level than the previous oversold points, because that shows me that the trend is intact. Okay, so for instance, on Friday, we had come down on Thursday's trade, and on Friday, we noticed early in the morning trade, there's buying. If you looked at the NYSE tick, the number of stocks ticking up versus down, consistently positive, coming out of a short-term oversold condition. That told me that large institutional players were interested in buying this market, and I immediately joined in for a nice trade. The idea, again, is that you're using the cyclical component to help you time participating in a directional move. Now, once you do that, there's still the issue of managing the position effectively to maximize your reward relative to your risk. And that will be the topic for our next video. Thanks a lot for your interest. I look forward to the next in the series.